Greed is right. Greed works.
Hello everyone, and welcome to episode 14 of Let's Play Wall Street Raider. I'm RakeM, your host. And before we get into the episode today, I just want to do something that I promised to do at the end of last episode. In episode 13, we turned on the autopilot and we started seeing, just what it does. And as we went through the episode, I noticed that my target price calculation here was coming up with some different numbers as I was going through to decide, whether it was time to sell individual stocks. And it turns out that the game was doing doing splits. So my total shares number was incorrect in a lot of cases. All these ones that are red are the ones that the autopilot did a split. So as often as not, whenever I would look at this target price, the number shown here was incorrect. Now we're going to let the autopilot continue to run through June the 1st before we do a final post-mortem on what it's doing. But I'm pretty convinced as of right now that I'm going to turn it off. It has a beneficial effect on stock prices, but it just does too much without telling you to where you don't know what's going on when you come back to a stock that you thought was set a certain way and you come back and it's different. Okay, so I like some of the things that it's doing. For instance, these growth rates on companies where I don't have a major market share, I'm fine with upping the growth rates. Dividends actually are fine on any companies that I don't directly own. So these level ones, these 12 stocks that I own directly that are in my direct portfolio, I don't want dividends on any of those because income is taxed higher than capital gains. And if it's a tier 2, so like all the stocks that the bank owns, if it wants to put dividends on those, that's fine. I don't care because that money is still in the bank. Okay, but once it comes to me, that's the end of the line, and I can't give it back without paying tax on it, at a higher percentage rate than what capital gains are. So anyway, we're going to let it run, and we'll look at these numbers, June 1st or so, hopefully by the end of this episode. Just a quick calculation, there was 114 different numbers that could have been changed, and 50 of them were. So about 45% of all the settings that I had in here were modified by the autopilot. But anyway, things that we need to get to. First of all, Hormel has some futures that we were told about in the last episode. We went and looked at them, but we didn't do anything with them. And they're set to expire the end of April. And right now it's March. So we need to go take a look at that and take care of it. And need to look at whether or not we want to take physical delivery of whatever that commodity is. So let's go there now. I guess I already took care of it then. Alright, well I didn't remember doing that. I guess I need to watch the previous episode before I do my intro. Alright, so that's taken care of. So next is my futures. Alright, so I have all of these, and corn has turned against us. We sold it short at 10, and it's now up to 9. And the expiration is 2027, which is still a ways out. But because of the direction that it's headed in, I'm negative. So we want definitely for that to go down. And I just want to double check and see. See, gold has gone down since we bought it. And silver is about flat at 14, almost 15. Oil has gone down, and we suspect that it will continue to go down, although it's been hovering in the 120s for a while now. And wheat we bought at 5 and it's up to 7.50, and we wanted to get it to 9. 9 is where we'd like to sell it. But if it gets above 8, 8.50 and starts to look like it's going to head downward, we'll sell it then. Alright, so we've checked on those. Next is the bank. A number of bankruptcies occurred at the tail end of last episode, actually throughout the entire second half of last episode, and we never looked at them. And at this point, STI has 15 stocks, so it can't receive any more stock in bankruptcies until we open up some slots here. But the first thing that we need to do is we need to move Warner Lambert out from under STI and move it down here under the insurance company, Swiss Reinsurance. So we need to have Swiss Reinsurance buy that. So let's go do that. Alright, and we don't have the cash to do it inside Swiss, so I guess I'm going to have to act as an intermediary here. Alright, and I'll contribute it to Swiss. Okay, that's one down. And then there was another one, I believe, FEMSA Bottling, which needs to go under Hartford. But we need to look at FEMSA Bottling because we haven't done anything for him since he went broke. Now Hartford has plenty of cash, so we won't have to act as an intermediary with him. And how many stocks does he have now? 7? Alright, now let's look and see what needs to be done for him. Alright, he's pretty small. Beverage, there wasn't much in the industry that was reasonably priced, except for Pepsi. But Pepsi owns Frito-Lay, so we weren't able to buy him. And looks like we can sue Coca-Cola with FEMSA. And we can also pick up Shasta. But that looks like it. So let's pick up Shasta. And we're going to merge them but not liquidate FEMSA. So that they can both sue Coca-Cola. Okay, only 83% is owned. So we'll have to see who else owns him. Okay, 2 different ETF funds. And we'll just buy them both out so that we can give him some cash. He's got a CCC credit rating. Alright, Costco did well. Alright, so let's contribute. I guess maybe we need to do the reverse here. Contribute Shasta to FEMSA. Okay, and I'm just going... whoops. Let's not contribute all our cash and all of our borrowing money. Contribute cash. And I'm going to give him $1,200. Okay, Phillips is positive now. His antitrust against General Electric is still pending, though. Siemens is finally climbing out of the basement. Hopefully he'll make some money next quarter. And Hitachi actually made money. Alright, so FEMSA. Alright, Coke has a 53% share of the market. So we shouldn't have any trouble suing the maximum amount. Okay, and we're going to make the settlement offer $8 billion. Guess I need to give that entire billion to Shasta here. Okay, let's have him sue Coke first. Oh, looks like he's already got one. Doesn't say. Let's see what Coke says, if it's still pending or not. Alright, that's the bonds. And here's the lawsuit, but it doesn't specify which ones. Just us, just FEMSA, no Shasta. So it must have already been resolved. And if he's in this bad a shape, or well, Shasta, if he's in this bad a shape, he must have lost. Alright, let's look and see what we need to do financially. That's 2-1. So if I give this to Shasta, we should be okay. We'll just give him $1 billion. And pay off put the rest toward our loan. You're 9.75 and 14.25, so definitely want to put that towards our loan. Alright, and since Shasta can't sue Coca-Cola, I'm going to go ahead and liquidate it. Alright, so credit situation is not the best, but I'm going to leave it right there until the antitrust is resolved. 0, that's fine. -6 is fine, and we want to up our R&D. Actually, we don't need to grow negative, except to keep him a large part of the market. Let's grow at 1%, and over here we'll do, what's our management? Reasonably confident, we'll do 7. Wrong button. Alright, looks like our Hitachi lawsuit's underway. And he wants to know how much we're going to settle for. I thought we put that in, didn't we? Alright, so $25 billion. That's been rejected. And we won. We won $60 billion. Alright, way to go, Hitachi. Alright, now what were we doing? Oh yeah, R&D, 7. Alright, we've had another bankruptcy. Hino motor. Transportation equipment. We don't have anything in that. How big is he? Way down here. Super small. We'll just sell him off. All right. So I don't think there's anything else we need to do here. Okay, Hino motor. We'll just sell him. Alright, now we need to go through, let's see, we're gonna keep Southern, we're gonna keep Lukoil until Arab. Well, Arab can go ahead and take him now. That's eventually where he's gonna go anyway. Has he liquidated his... Nope, he hasn't liquidated that yet. He doesn't have quite enough cash, but we can carry some debt since we don't have any. Alright, let's buy Lukoil from STI. I think we got to change banks first. Good. Our management change under Litton has had an effect. Alright, let's change bank to STI. And watch, we're going to go from 24 billion line of credit to 667 billion. That's why you want a big bank, folks. Okay. Phillips is now filed for damages. Alright, now let's buy that Lukoil. And yes, 100%. Gotta borrow 81 billion, that's fine. Okay. Alright, now let's go back to STI, see what else we need to reposition. Alright, so we're going to keep Southern California Edison. Verizon, we need to put... No, Verizon we're going to keep too. That's going to be under the bank also. Alright, so Fuji Machine, he's in capital goods. So here's where he is now, and since Hartford is light on stocks, I'm prone to go ahead and move him down there. We don't want the bank to be inundated with stock, not that he is right now, but we don't want to allow that to happen, so we'll just move it since we've got plenty of money over at Hartford to deal with stocks. Okay, that's done. Alright, and we're able to do a research deal again. Last episode we got an error when we tried to do this for the bank. We're very capable finally. Costs are down to 1.4% of deposits, which is excellent. Alright, so let's deal with HP and Seagate. They're both in the same industry. They're both pretty small. We don't have any other companies there. Let's look and see how big they are. Alright, so computer peripherals, right here, pretty small. 18% of the industry is only 10 billion, so there's only a total of 55 billion in assets in the whole industry. So let's just sell those off. No need to mess with stuff that small. Alright, what else? Barnes & Noble bookstores. Pretty sure this is going to be the same deal because bookstores is always pretty small. Concentric Medical is on the way down. We got to check that. Holy cow. Oh, this is Sumitomo. He started out as a holding company. He's got this much. He's this big because he owns other stocks. And it looks like he's about to go, well, not bankrupt, but he's about to lose half his net worth. Not sure why. Large tax carryover. Doesn't really say how he lost the money. Silver futures contract, maybe that's what it was. He lost money in the commodities. Wheat's up to 8. Gotta keep watching that. Alright, so we'll just sell this off. Not enough money to worry about it. Okay, what else? Universal. Not sure what industry he's in. Tobacco? Where's tobacco on our list? Way up here. Okay, we might want it. Of course, if we do, we'll give it to Hartford. Alright, let's look. Universal is 4%. And British American Tobacco is 7% of the market and reasonably priced. He's just got too much debt. Too high a dividend as well. We could freeze his loan, and then combine these two. We're going to capture this one in a bankruptcy. Alright, so let's do that, and let's have Hartford do it. So I'm going to choose him and then go to Hartford, buy. Okay, and now we want to buy Universal. Okay, we'll give Universal to British American Tobacco. Alright, now let's liquidate Universal. Alright, and we want our debt to be like $4,500 roughly. So we need to give him $8,300. Alright, let's get rid of the bond. Well, actually, that's a great price, but let's pay off the loan first. $841, keep going. Alright, management-wise, let's see what we need to do. Eliminate the dividend. Growth rate We're very incompetent, so we're going to have to reform it. So let's make this 11, and that means that we'll have to keep growing negative until we reform. Alright, so 0, -10, and 11. Alright. Alright, MGM Grand did well. He's down a little bit, but he's up from last year. Alright, now who was it that earned 51 cents? Looking for 51 here. Was it Concentric? That's who we need to look at. Alright, here we are. Only 2.25% of the market. So we probably... Gosh, they upped their R&D. 14, 14, 14. What are we rated at? Reasonably competent. Alright, I'm just going to up it to 12. And I'm going to increase the growth rate actually because we've got plenty of cash. I'll make it 36. Okay. And now it's a matter of freezing some loans. So first thing we want to freeze is the tobacco industry. Alright, now let's go to the bank. Freeze, unfreeze. And we'll just go down the list. So first is all... Oh, wait a second. There was really only two, LTR and MO. So Lowe's and I think Reynolds. Is that right? No, Philip Morris, that's who it is. Philip Morris. Or is it Altria? Okay, Altria and Lowe's. Yeah. Okay. This is the way we did it when we were freezing everybody, but we don't have to freeze anybody. We just have to freeze the ones that are growing too fast. Alright, so Altria is here. And Lowe's is here. Oop. Alright, and then let's go over to Concentric and see if there's anybody we need to freeze there. Alright, so it's only 2% and all these guys are growing too fast. The returns are decent, so I don't have to freeze any of them. Let's just hold off. We'll hold off for now. Okay. Going back to the bank and its bankrupt companies. Omnicom is a holding company. And he owns stock in advertising. So let's see if that's something we want to keep. Advertising. Advertising. Way down here. Wow, all the companies in the whole thing are only 12 billion. I'd say we don't need to keep that. Alright, so we'll just sell Omnicom. Alright, what else? We got A&P, Universal Studios. That's an entertainment. We have companies there. Hey, wait a second. I think I turned on the ticker. Alright, we need that ticker running if we're going to make it to June 1st. Alright, Browning Ferris is doing well. Alright, so Warner Brothers can just buy Universal from the bank and merge it. Okay, so buy. Just inherited Vivendi, which, if I remember right, owned US Filter. So hopefully we got a good chunk of him. But it sold off its shares. And we got 100%. But he probably doesn't have shares of US Filter. We'll have to look at that in a second. Alright, so let's... Alright, we'll have to look at him. Let's liquidate Universal. Okay, 2.5 to 1, but our stock price is going up, so I like what the autopilot's doing for our stock prices. It's just, you know, this one's in actually a good situation. I like this one. He doesn't have a dividend. Not that it would matter on him, but I like what he's doing here. Okay, so let's go back to the bank. And take a look at Vivendi. Okay, so he still has some stock. How much? 52%? Alright, so we've got Browning Ferris. Ooh, and US Filter is down low now, so we can buy that stock back. The outstanding portion. Alright, so let's add this up. 16, that's 28.7, 33.2. That's a good chunk. Oh, the industry's going too. These are some nice returns. Let's do that real quick before these prices go up. Alright, so let's see how much cash Browning Ferris has. I don't know that he's got enough. Who owns him? Hartford? Perfect. We'll just have Hartford buy up all the stock. So starting with Vivendi. Okay, and US Filter. We got a cost overrun. Alright, well that's one of those random things like the pension fund being overfunded or underfunded. Alright, so we're going to contribute to Brown-Forman the Vivendi stock. And the US Filter stock. Okay, now let's liquidate Vivendi. And we should have 100%, and we do. So we'll liquidate that as well. Alright, now let's see what we need to do. That's 2 to 1, so we want to give him half of this. Well, not really. Alright, so this divided by 3 is what, 19? No. Divided by 4. So 14. So we want to give him 5.5 billion. We've got that. No, we just got Renault. Okay. And we also gave Volkswagen money for no reason whatsoever. Alright, so here we are. Well, I guess we gave him too much. I guess he already had some cash. A little bit better than 3 to 1. Earnings are supposed to go up. And he's mediocre, so let's check and make sure that we've got a good R&D rate. He's up to 8. And we've got a good return, so we can make this 9. Alright, no dividend, growth rate 7, which we can actually increase. Let's make it 12 and see what that does. Alright, still improving, so that's fine. We'll go with 12. Alright, let's take a look at Renault. Auto Europe. And he owns Nissan too, but only 7%. Alright, so our VW is our primary company there. We can increase to a 16.5% share of the market if we just buy Renault. So let's see if VW has the cash to do that. He's got no loan, so yeah, I'd say we do. Alright, so buy Renault. Mazda is up. Excellent. Now let's liquidate Renault. Alright, 2.5 to 1, which we can take down if we repay what we have. Okay, it's almost 4 to 1 now. Earnings are supposed to be up. Of course, this hasn't updated yet. Still improving, and we're competent. 8% is actually pretty high at this point. You can lower that to 6. Okay, -10. Do we still want to grow negative? Yeah, we'll still grow negative for another quarter or two. Get this up a little bit more. Okay, back to the bank, and what else do we need to liquidate out of here? Alright, so we're going to keep him. We're keeping all these now, A and P. If I remember right, we had Food Lion at one point, but we sold it because this just wasn't that big of an industry, I think. Or maybe it was that his price was way high. But let's look. Supermarkets is up here. So it's not huge. It's only 20% of what this one is. So now I lost him. There he is. Let's see. I mean, these returns are okay, so we could just turn them around and make a profit on him. Alright, so we want this to be 1,200, so we need to give him 15. Alright, settings. 1%, 0%, and R&D, let's make it 9 to start with. Where are we now? We're mediocre. Yeah, I know that takes us down under 10%, but we can grow at 1% too. We don't need to grow negative because we've got the debt under control now. And we're still going to lose money on the next quarter, but after that we should make some money. Alright, spot wheat went up to 8.54 and now it's backpedaling, so I'm going to go ahead and cover my positions there. Southern California Edison is still making money, but he's going down. We'll have to check those later. All right. Corn's going back down again, thank goodness. Silver's heading up. We just need gold to do the same. All right. And we want this to go up too. Alright, something that I meant to mention during the introduction, but I got in a hurry and forgot, is we had an incident come up last episode regarding the fund advisor fee, and that was when we were dealing with some stuff on Hartford Insurance Group. Right, so we had this contract. HIG is an investment manager of Energy Sector Fund. Estimated quarterly pre-tax management fee income is 16 million times 4 for 64 million for the year. Right, so what we were doing is we were setting the productivity spending, and I noticed this button down here. It's something that was introduced a few episodes or a few versions back in the game, and I really didn't know that much about it. So I looked up in the manual the way it works, and I'm not going to show you everything because you have to pay to get this manual. I don't think the developer would like it very much if I showed you everything, so I'm just going to give you the introductory paragraph which explains it. Basically, when the game first randomizes its database at the beginning of the game, every ETF fund, and I think there's 15 of them, are randomly assigned a fund manager. And then every 2 years, the fund compares its performance against the stock index to determine whether or not it needs a new manager or not. Okay, so 15 different companies in the game, usually either a securities company or an insurance company, become the magical beneficiary of one of these contracts. Now, as far as I can tell, the manager who receives that fee doesn't actually have a hand in the management of those funds. It's all theoretical. It all happens behind the scenes. There's no actual decisions that you have to make if one of your companies is the manager of a fund. But that's how they work. So you can set the fee anywhere from 0.2% to 1% of the fund's assets, and that's based on an annual amount. So you collect 1/4 of this per quarter. But if your rates are high, then it'll think about changing managers. If you underperform, or if the fund underperforms, because you really don't have a say in what it does, then it'll change managers. If your company goes bankrupt, then it'll change managers. But it'll survive mergers. It'll survive downstream asset contributions. So if you're a securities company with a contract and you give all of your working assets to a subsidiary, it'll also receive that contract for management when you transfer the assets. Same thing if you do an upstream merger. It'll also the management contract will also go upstream when you perform a merger. So that's how they work, and this is just to set the percentage amount. Right now it's at 0.3%. It's free money. I don't have to do anything for it, so I'm just going to leave it alone. But that's how it works, and I just wanted to mention it. Okay, so does the bank have any more stocks that we need to deal with? I think that's it. We're going to hang on to A&P and just run it up. Alcoa we're going to keep. Southern we're going to keep. Mitsubishi we're going to keep. Verizon we're going to keep. And STI $1.45. Alright, so let's make sure the ticker's running. And we're going to keep an eye on these now. We want that interest rate to go up. Still making a lot of money on these swaps. It occurs to me that these companies that we bought, we haven't checked them for swaps. Probably should do that. Alright, $1.40 in income. Let's see if he has cash now that we need to deal with. Alright, stocks are down. It's got a lot of cash. With the interest rate this high, we should probably buy some more bonds. How many do we have? 6? This is trading at 93, and he's got a good return. Alright, let's get him some more bonds. Alright, that's a nice return. Boy, not a lot of bonds out here, but there's a few. Looks like Bank of America is going broke. His bond's really low. Let's look at him. No, he's not going broke, but alright, let's buy those. And let's buy these. Alright, any others above 20,000? Nope. So AT&T and Apple. Oop. Not stock. Bonds. Right, Wells Fargo. And AIG. Okay, that's 100 billion. So let's put a couple 100 billion here too. All right, so that's 50, 100, 150, 200. All right. And you see how, remember how last episode we upped these to 900,000 and now they're down in the 800,000 range? That has to do with the writing off bad debt. So he wrote off 69 billion in bad debt on consumer loans. So what is that? 69. Well, let's just do the whole, let's do it, let's be precise. 900 billion minus 831,580. $68,420. Divide that by 900 billion. 7.6%. That's what percentage got written off. And the higher the prime rate, the bigger that percentage becomes. So even though he's making, what is he making? Uh, 13.34%. So 13.34 minus this percentage. Oh, I guess I gotta put 0.1334 minus this percentage. Hit the wrong button. Alright, so minus 0.0706. Oh. I'll get it right here in a second. So 5.7% is what we're actually earning on this 800 and whatever billion. So even though it says 13.34, don't believe it. That's not what you actually make. Because every year it writes off a percentage of those loans. That's why bonds are a better option. Business loans are a better option. Plus, business loans are collateralized. So when they go bankrupt, you get them. You know, you inherit them. Or you receive them through the bankruptcy, whatever. However you want to put it. Alright, so let's let this ticker run. Swiss Reinsurance did well. Nissan America. Alright, let's take a look at that. We have Nissan America there and Sao Paulo here. Wow, look at that rate. 50%. That's awesome. And we're only making 5 down here. Same size company too. Wow, that's crazy. He must be very capable and he must be like grossly incompetent. Let's take a look. Alright, very capable, no surprise. And then Sao Paulo, grossly incompetent. Alright, who owns Sao Paulo? Hartford? Alright, let's have Hartford buy Nissan America. And let's see what Nissan America is trading at, since we didn't get 100%. Oh, he's kind of high. He's kind of high, but it's because of all of his debt. So we're not paying a premium on this portion, just this portion. So we're going to pay an extra $1 billion to get a $5 billion company. That's not so bad. That's like a 20% markup on the entire value. Let's see. Alright, so let's go to Hartford. Have Hartford buy the rest of it. Okay, and let's have Nissan do a merger with Sao Paulo. Alright, success is guaranteed because we own 100% of Sao Paulo. Okay, and we only have to buy back 4%, so, or tender offer for 4%. Now it just went through a bankruptcy, so hopefully we won't have to offer too high a price. Let's try 24. And good, they accepted. Alright, so how much do we need to give him? He's got 500 in cash. We want this to get down to like 2,500, so let's give him 2 billion. Where is he? Oh, here he is. Okay. His bonds are real high, and so is his loan, so it doesn't really matter. We're not getting a discount here, so let's just put it all towards the loan. Alright. Still very capable after the merger with Sao Paulo. Scheduled to make money next year. Let's see what we need to change his management to. Alright, so that's already zero on the dividend. Do we want to grow negative? Yes, we do. R&D, let's make it 10%. Let's make it 9%. Okay. All done there. Now we've got 10 stocks in Hartford. So I think we're probably going to have to create a new insurance company. We were going to have to create a new insurance company or a new bank, one or the other, to do the next round of interest rate swaps anyway. So let's go ahead and create a new insurance company. And as you know, we only do the minimum to start up a new company so that we don't have major startup costs. That's fine. In Ireland, that's fine. Okay. And now let's give him a few $1 billion. I'm not going to give him any stocks until he's engaged in interest rate swaps, and those swaps are working out to our benefit. If he goes bankrupt, I don't want to lose any of the stocks that I give him. So I'm just going to have him spend some money on bonds. In the meantime, let's see. We need something in the 5,000 range. Walgreen Drug, that's fine. Okay. And we can do one more, I guess. How about this one? Okay. That's good enough. Alright, now we just need our interest rate to go up. Okay, so Luco finally has paid on the asbestos suits. I wonder if that's over now. And he bought a bunch of assets from Mobile. That's that autopilot at work again. Lukoil made a bunch of money as a result. Of course, we cashed out our hidden reserve also. So that's what that money's from, primarily. Alright, so let's take a look at this and see. No, he's still a defendant in numerous lawsuits. So don't want to liquidate him yet. Nice return on Arabian. Let's take a look at the industry. We're growing at 19%. It's time to back that off. Make it 6. Or maybe even 5. Okay. $11.5. Go up just a little more. Okay. Oh. Alcoa. He's going up, so that's excellent. Nippon's going up, that's excellent. Shoot, he's going in the wrong direction. Go up. Fuji Machine, excellent. He's slipping a little bit. Let's take a look. We're growing at 29%. That's way too high. Way too high. We're very capable, so we can back off on our R&D. Back it off to 9%. And we want to reduce our growth rate to, gosh, like 6. Alright, let's do that. 6% and R&D 9. Okay, so that'll help us out on our return, and because this is long-term 8% and this is just a temporary dip, we might have to freeze these two, but I'm going to let it ride for now. Alright, Litton had a good quarter. Airtran had a good quarter. And we're going to wait until like the end of the year before we look at all these to see if we're going to sell, if it's time to sell them. Alright, Singa is going down. Let's take a look there. Yeah, it's because of all the money we're spending on R&D. Actually, it doesn't need to be quite that high. The dividend's too high too. Let's look. Mediocre. I think we can drop our R&D to 8 and still get the same effect. Alright, we got another antitrust suit coming to court. And this one we're going to make the settlement offer 11,000 billion or 11 billion. Oop. All right, they rejected that and we lost the suit. Okay, that's fine. Let's we need to liquidate Hitachi. Need to liquidate him into Siemens. Alright, and Siemens can now liquidate Philips as well. Alright, and we can go ahead and get rid of this stuff. Buy back the bonds. Alright, and eliminate the loan. Now we got a lot of cash. Let's see what we want to do with it. Okay, we still need to grow negative. Still need to grow negative, at least for now. These two are going to go broke. He's going broke. Okay. Alright. Kimbo Tire. He's in the rubber industry. Tire and rubber. Don't think we have anything there. Nope, not yet anyway. Or we do now anyway. Alright, so tire and rubber right here. Not huge, not teeny tiny, but not huge. Somewhat mediocre, 5%. Just got HeartMax too. Alright, this industry is not that big, and you could look at Bridgestone, but how big is he? 10 billion? $10 billion for 20%. So we could have a quarter of the market share and it would be worth 12 billion. Of course, we'd pay back some of the debt, so we would add another 10 billion on top of that for 35. Let's just sell it. Let's just sell it and get it out of here. We got enough to manage. Alright, I want to see this interest rate go up. Alright, Liz Claiborne is ours now too. That's also textiles. Liz Claiborne and HeartMax. So where's textiles on our list? Probably way down the bottom. Yep, right there. Not enough to worry about. Dow did well. Alright, so let's sell HeartMax and Liz Claiborne. All right. Biomet. Yeah, let's not mess with him either. We'd want to marry him with some other bigger companies, and there's none that are reasonably priced. Finlandia. Oh, Finlines. What's he in? Shipping? Pretty small. Let's see where shipping is. Here it is. 76. Less than 1% of the whole market. 0.5%. Nah. Let's just sell him off too. Alright, Microsoft is coasting right around the mid-60s again. Oh, that's where we wanted it, right there. Okay, 12%. I'm going to fast forward now while I put in all the interest rate swaps for our new insurance company. And when I'm all done, I'll come back and we'll wrap up this with updated spreadsheet. Okay, that's all the swaps we can do for Irish Life and Perm. We started getting the error that it couldn't find any targets for swaps, which means that we're at 1,000 for the game. That's the most it can hold of these. So I added them all up, and Irish Life and Perm has 591. And as long as the interest rate drops below 11.23, we'll make a decent amount of money just like we did with the bank. Now you might think that we're done, but we're not. Okay, so let me close this and go over to the bank. Alright, now the bank, I want to add these up too. These are all about to expire. Alright, so $15 plus 7 more. So 15 times 17 plus 7. That's how many the bank has left. 262. Now, some of these are set to expire in the third quarter of 2023, which is this year, and the rest are set to expire in 2024 of the first quarter of next year. And if I want to terminate like this one right here, I have to pay $1.8 billion. And what I want to do is, if I just let these expire naturally, I'll collect income for the next 2 or 3 quarters, and then I won't have any interest rate swaps anymore. And if the interest rate is still is no longer above 12, who knows how long it'll be before I get another opportunity. It's been 4.5 years since the last time the interest rate was this high. So what I want to do is I want to calculate what it would cost to cancel these 262 swaps. So let's see what 262 times 1.8 billion is. See, 1802.5. So 472 billion. So if we were to cancel them all and then do a new set for the bank, 255 of them, or 262 of them, excuse me, then that income could repay this plus 10 times more. Well, 9 times more, potentially. Alright, so I'm thinking about canceling all of these and doing a new set just so I have income coming to the bank over the next 5 years off of swaps. Alright, so I think I'm going to go ahead and do that, and I'm not going to make you watch me do it in real time. I will fast forward and I'll be back as soon as I'm done. Okay, all the interest rate swaps that SunTrust had, they're now canceled. We got a much better deal than our $500 billion that we thought we were going to, because a lot of the, well, pretty much all of the short positions, not pretty much, all of the short positions were still profitable. So canceling them only cost 125 million each. And some of the long positions were actually with companies that we owned, and by some I mean like 5 or 6. So the last time we looked at SunTrust, it had cash of 1.4 trillion, and it still does. So that didn't cost us very much money to do. Alright, so now what we're going to do is we're going to go back over to Irish Life and do the rest of the swaps, because we still want to do all of our swaps under this guy, because if the interest rate goes up between now and next quarter, we don't want our bank to be jeopardized. We want it to remain intact. So only this guy will go broke, only Irish will go broke if the interest rate turns against us. Alright, so I'm going to fast forward now while I put the rest of those in, and I'll be right back. Alright, so we've got 731 contracts altogether, interest rate swaps. Normally I get up to 950. I'm not sure why it's not finding targets for these swaps beyond 730. I think what I need to do is check the database, uncheck everything, and see how many total companies there are. There's 976 in the game, and we own 43 of them. So 976 minus 43 is 933. So who owns what? This companies with interest rate swaps. So we're just going to scroll through real quick and see if anybody else has any besides us. And it doesn't look like it. But I guess only 731 of the companies in the game are willing to do interest rate swaps. Maybe the other 200 or whatever it is are just too small. But in any case, we've got the max. And the other bonus is that we know that none of them are companies that we own except for Irish Life. Because when you go to engage in interest rate swaps, it only does it with companies that you do not control. Alright, so I've updated my spreadsheet, and we never did change this dividend to 0, so it's still green over here. But in red is everything that the autopilot modified. And something interesting I noticed, if I just look at the companies that I own directly, these are all the ones that are under my ownership, none of them had any kind of change to their tax basis cost. But if you expand this out, several of the subsidiaries have. So that's where the autopilot is contributing cash or doing something else that modifies the tax cost basis. Okay, now I'm not going to weigh in at the end of this episode as to whether or not I'm going to continue to use the autopilot. I want to do some more research specifically regarding what the stock prices are for all of these and how high they are, because I suspect that these are going to be higher. Now, I think it's a short-term spike in the price. I don't think that, for instance, on AOL, I don't think 38% is sustainable for very long. You know, he's going to drive down the pre-tax return. So while he's growing at this rate, he's probably got a nice stock price, but you know, let's say after a year, you know, his stock price will start to drop because his earnings are going to decline. So this is great for, the autopilot is great for a 1-year outlook. You know, it maximizes your stock price based on the settings that it can control over the course of the year based on the conditions within the industry. But as far as turning it on and leaving it on throughout an entire 35-year game, I don't know that that's really a smart thing to do. But I'm not weighing in one way or the other. I'm still uncertain. Gotta do some more research. Now, if I do leave it on, I'm going to need to change how I structure my corporate entities. So right now, instead of having these 13 all under my ownership, in order to prevent the autopilot from giving me dividends that I have to pay taxes on, I would need to restructure my companies into something more like this, to where I own one entity, and then that entity owns several parent companies who then have their own stocks. And in this case, I would be the CEO of the bank. And so the autopilot would not mess with the bank at all, would not create a dividend for it or anything. But it would for anything underneath it. And so, you know, I would have the bank own, like, say, 3 insurance companies. Instead of me owning them, I would transfer them to the bank. And then they would buy and sell stocks. And the bank would basically have the other slots for its stocks over here to collect bankruptcies. And then it would either sell those off or transfer them over to these insurance companies. But, you know, that's if we decide to let the autopilot run. Now, there's a new version of Wall Street Raider that came out March 1st. And one of the new features is that you can toggle on or off the autopilot on a company-by-company basis. So if you are using the new version, you know that you can turn that on or off for each company. Alright, so in version 7.6, which is what I'm using for this series, I wouldn't, or you know, if I were to upgrade to version 7.7, I wouldn't need to do that. I could simply turn the autopilot off for the bank, for the insurance company, this insurance company, etc. And I could turn them on or off individually at each company, rather than having only one that I can turn off. Alright, but as far as whether or not I'm going to continue to use it, I don't know. We're gonna keep going to June the 1st. Right now it's the middle of May. And on June the 1st, once I've had a chance to look at all the stock prices for all these companies that are being run by the autopilot, that's when I'll make that decision. But we've been going along enough in this episode. We're going to end it here. Our our net worth has dropped significantly. About $18 trillion we lost. And all of that is from STI. STI went from $259 a share down to $130. So that's where all of that loss came from. Not exactly sure why it went down so much, because the earnings are only going down a little bit, and we're actually supposed to be up from last year. So I'm not exactly sure why that's dropping. Oh, and we got this error again. Let's see what our projected earnings are for next quarter. Here's the bank, $1.39. See, so we're up from last year. So I'm not sure why the stock price is dropping. But we're going to take Irish Life and we're going to fold it up into STI. And whenever Irish Life starts collecting on those interest rate swaps, we'll have it do a lot of extraordinary dividends so that STI can parse out the money. But until next time, guys, this is RakeM saying have a good one. Please like and share if you enjoyed the episode, and I'll see you next time.